The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Wednesday the 20th, 30 minutes to the close. What do you need to know out of Europe this hour? Well, UK inflation staying above 3% in September and is now expected to climb to 4% or higher. That's double the Bank of England's target. We'll discuss that in a moment. Jens Weidmann quitting the Bundesbank. The surprise move for personal reasons comes after he was passed over for president. We'll talk about the implications there. Angela Merkel saying within the last few minutes that it will be up to her successor, who ultimately is his replacement. COVID cases continue to climb across Europe. The UK Health Secretary will hold a press conference at the top of the next hour. He's expected to urge the elderly to get boosters. His government, though, is still ruling out lockdowns. For now, many people may argue. Alex, let's talk about where we are with the markets. Equity markets bid, but only just here in Europe. We're up by 0.2%. But again, we're just continuing to push higher. The stock 600 about to potentially take out the 470 level. Remember, we got up into the mid 470s not that long ago. Crude is negative, but very much off the floor. That inventory data we broke in the last half hour, certainly pushing crude prices back up again. Brent crude, 85 on the nose.
Yeah, really bullish here for the oil market. In the U.S., we're seeing a sixth straight day of gains for the S&P. Haven't seen that since about mid-July, up by 0.4%. You have earnings, and you're kind of dissecting the have and the have-nots of earnings versus at the same time, there is no alternative. And John Authors actually added something onto that. Resistance is futile. No matter what your sentiment is, clearly people are buying stocks. Just take a look at Magna International here. They actually wound up warning in their quarter about margin and sales forecast, lowering its estimates for 2021, citing all the disruptions in the auto supply chain, yet that stock is up by about 2%. Flip it, Novavax, one of the worst performers here, off by a whopping 10%. Their vaccine manufacturing may not be up to snuff, so that's really wound up hurting that stock. On the another upside, Bitcoin, talk about record highs, also inching towards one. Bitcoin ETF, BITO, second day trading up over 4%. Tons of liquidity and volume coming in for that ETF as well. But I love that idea, Guy. There is no alternative. Resistance is futile. Feel what you want and then go buy stocks.
Yeah, that seems to be quite well represented on Wall Street right now. You certainly saw it in the Bank of America Fund Manager Survey yesterday, didn't you? A concern about slowing growth, but this idea that there's still this wall of money out there, as a result of which, what's the option? There is no alternative. Stocks. Let's get back now to that news regarding the Bundesbank. Bundesbank President Jens Weidmann is to step down. The German Chancellor, the current German Chancellor, Angela Merkel, says that his successor will be chosen by the next coalition. Here with the latest, Bloomberg's central bank and Eurozone reporter, Caroline Look. Caroline, let's just talk about not why this is happening, but the implications of it. What impact is this going to have on policy? Do we have an idea who Weidmann's successor is likely to be?
Hi, Guy. Yeah, I mean, Weidmann's resignation really does come at a very pivotal moment for the ECB because officials are actually getting ready to decide how they will reinvent their bond buying program for the post-crisis era. So Weidmann will be participating in December when officials are expected to decide the next steps. But, the big question is who will succeed him and what views will they bring with them on the inflation spike we're seeing in the euro area, as well as how adamant they will be about, keeping loose monetary policy or rolling it back. And that question over his successor will ultimately be a political one. Weidmann was appointed as a very close ally of German Chancellor Angela Merkel, and the new coalition government, which is led by the Social Democrats, might want someone who is closer to their views, and they might also want a woman to take the job. In the 64-year history of the Bundesbank's existence, it has never actually been led by a woman, so maybe now is the time.
There's some pretty solid candidates as well, potentially, to fill those shoes. Caroline, thank you very much indeed. Bloomberg's Caroline Look on what is happening over at the Bundesbank. Staying with monetary policy, UK consumer prices accelerating well beyond the BO's target, for a second month. The data we got today for September, global disruption in supply chains driving prices higher. We've got energy to factor into the mix as well. It was a little bit of a dip, but now is expected to accelerate further from here. Let's talk about what the implications are for policy. Lizzie Burden joining me now on set. This is just further evidence that maybe the bank takes action. What do we take from this data about that decision?
Yes, so this is going to buttress market expectations of a rate hike in November of a rise to 0.25%, which was already what markets expected. This is the last inflation reading before the November meeting. You saw inflation in September coming in below economists' forecasts, but still above the Bank of England's 2% target. So every month that this continues, it makes the narrative that this is only transitory look shakier and shakier. And it'll weigh on household income because the government is cutting benefits and raising taxes at the same time. For the budget next week, the Chancellor is unlikely to want to unleash the spending taps when he's already going to be aware of the inflationary pressures that more government spending will add to encourage the Bank of England to hike interest rates more aggressively. And so if they do that, that's only going to add to the cost of servicing the government's debt burden. So wide implications of this inflation print today.
Yeah, it definitely feels like a rock and a hard place with that one, spending and then the inflation backdrop. Lizzie, thanks a lot. Bloomberg's Lizzie Burden joining us. And while the White House is outlining its COVID-19 plan to vaccinate younger children, you got science analytics company Airfinity is now out with new research showing that vaccinating older people can have a significant impact on hospitalizations. And this comes as cases are rising in Europe, and we've seen them rise a lot in schools in the UK. Here to break it down is Rasmus Beck-Hansen, Airfinity CEO. Hey, Rasmus, first off, what are your models showing you about the increase in cases in Europe and the UK?
Well, I think the numbers between the risk reduction you have from vaccinating older population versus the younger population is just quite striking, right? So you have, if you have 800, I lost my thread there.
No, you're good. I was asking
you,
just in terms of the case count rising in Europe. What are you noticing?
Well, so we are seeing increasing rises in Germany, which is quite worrying. We're seeing the very high levels, consistent high levels in the UK, and they've stayed there for quite a while. We're not seeing a big increase, but we're also not seeing the decline that one could have hoped for. So when you look at Europe and UK in particular, the clouds are really gathering. And I think the key numbers to look at is really what is the percentage of the population that you vaccinated, the elderly, the high risk versus the younger. If you look at overall vaccination rates, the numbers aren't very different. But if you break it down and then look specifically at how many of the eldest, highest risk have the UK and the US vaccinated versus other European countries like Portugal, Denmark, etc., there are quite a big difference. That actually explains a lot of the hospitalization differences we are seeing. You need 800 vaccinations to prevent one hospitalization if it's an elderly. You need 25,000 vaccinations to prevent that hospitalization if you are below 18, if vaccinating below 18. So the risk profile is just very, very different.
The UK just reporting its data for the day, 49,139 more COVID cases on October the 20th. As my producer points out, the UK now has more COVID cases than France, Germany, Italy and Spain combined. Is the UK just further forward in the process? We started vaccinating earlier, therefore maybe we're starting to see some of that immunity fading. We're going to be hearing from the Health Secretary a little bit later on. Would he be better at this point to focus on, as you say, vaccinating the elderly, getting that booster shot in before winter really kicks in? Is that where the focus should now be?
Yeah, 100%. I think we're seeing a number of factors in the UK. We've seen the rise of the Delta plus variant as that seems to be 10% more transmissible. We haven't seen that in other European countries. So we've seen similar patterns. It's likely that will move into other European countries, and we'll see a similar pattern there. But then I think there's also a lot of like quite unique factors for the UK. It is a transportation hub. I also think public adherence to masks in public transport, social distances is less than it is in many European countries. That also explains it. But I think it's important to say I don't think that the UK is yet in lockdown territory. I think the key number to look at here is really hospitalizations. And we have around 900 to 1,000 hospitalizations. It's been pretty stable. If you looked at last lockdown, that happened when we had 1,500 hospitalizations a day in the UK. So there's still some way to go. But there's no doubt, those are high numbers. And if they move a little bit higher, we move into a winter season as you come, we might have flu cases and other infectious diseases. Then, a lockdown could be the only way out for the government. But that's not yet the case.
Rasmus, here in the U.S., we're talking about maybe now vaccinating adults 40 and over. From your models, are we better off doing that or better off purely focusing on the elderly?
I don't think it's a binary. It's not a choice. You can do both, right? But if you were to choose, focus on the elderly. There's still almost 15% of the highest risk groups in the U.S. that haven't been vaccinated at all. That should be the primary key focus. Of course, vaccine mandates, etc., might not be as effective for those because some of them, many of them are pensioners, they don't work, etc. So you have to find new innovative methods. And then when you get to the booster campaign, because we are seeing waning immunity of around 10% month on month, then that booster program, getting that moving really fast is critical. And I think that's also, we don't have full availability on the booster numbers, but from what we hear, UK is struggling with the booster programs, and also US have struggled to some extent with that. And that could also explain the divergence we're seeing on country levels. So the elderly, definitely in high risk groups, immune compromised, etc., those should be the focus if you want to avoid the risk of a lockdown going into the winter.
Why do you think that message is different? Why do you think there is such slow uptake? Does the message around boosters need to be different than the original message about kind of the first and second vaccinations that were delivered? Why is it, do you think, that we are seeing this hesitancy? Maybe not even hesitancy, may just be apathy in terms of getting these shots done for the elderly?
That's a great question, Guy. I think part of it is quite a big logistical challenge. The first vaccination program was somewhat easier, right? You just had everyone to get vaccinated quickly, right? Now we're seeing you need a more targeted message. You need to know exactly when a person got its first and second vaccine, and then count the 6 months or whatever the dosing regime is. Then going out to target them with direct messages, etc. So it requires quite a strong digital setup, quite a strong public communication effort. And then I think, there might also be some COVID tiredness in the population. We've heard so much about it, been through so many things, and that might set in both the UK and the US.
As I said, we're going to hear from the Health Secretary at 5 p.m. London time, noon in the United States. It'll be interesting to see what that message is. Rasmus, always a pleasure. Great to get you back, getting an update on what is happening here. Rasmus Beck-Hansen, Affinity's CEO. What are we going to do next? Markets weighing strong earnings versus inflationary pressures. That's the debate at the moment, isn't it? S&P Global Ratings sees inflation decelerating below the ECB's targets next year. Their chief economist for EMEA, Silvia Ambroya, is going to be joining us next. This is Bloomberg.
What we see from the inflation front is that the situation is going to get worse. And then, of course, we're working on pricing to make up for most of that, and also on internal efficiencies.
There's a lot of remedies in the world, painful as they are, for inflation. It's very hard to get rid of deflation. So if you had to err on one side or another, you'd err on allowing a certain amount of inflation to take place.
You're seeing signs of inflation, whether it's transitory or something more long-term. They have to begin to stop the quantitative easing, the taper as people talk about. That's going to be a real challenge.
That was Nestle CEO, former Goldman CEO Lloyd Blankfein, and Barclays Jess Staley, all on inflation concerns. Well, joining us now is Sylvain Breuer, S&P Global Ratings chief economist of EMEA. And I want to start just on the UK for a moment, as you had sort of inflation heating up again for a second month. The expectation is that the BOE is a done deal, that at some point they're going to hike by the end of the year because of this rising inflation. Is that a policy mistake?
It looks like the Bank of England is a bit hasty in its willingness to normalize monetary policy, because it's not only about the lift-off. If you look at the current market pricing and the current guidance by the Bank of England on stopping reinvestment and starting selling outright assets, the result is that the normalization, the shrinking of the balance sheet of the Bank of England might come as soon as March this year. So it's very hasty. It's even more aggressive than the Fed. And for inflation that is caused mostly by energy and not by core inflation, not by wages, maybe a bit hasty, yes.
We're starting to see significant labour shortages, though. Labour costs are beginning to rise. It was always the second-round effects that the Bank of England was worried about. If what you say is true, why do you think they're doing what they're doing? Because they have been very clear, the governor has been very clear, he's worried about second-round effects. I'm assuming that he sees evidence for that.
It's a bit early to have a clear view on what's going on in terms of wages and generally on the labor market. You have compositional effect, you have base effects that probably distorts wages to the upside. We will see a slowdown in wage growth in the US and in Europe over the next quarters. So, as said, dust has not settled. Dust from COVID-19, from the lockdowns, has not settled, and it's early to take policy steps.
Well, Sylvain, I'm interested to get your take on wages. You just said, because I feel like every single article I read is that you have companies, whether you're going to be a huge investment bank or whether you're an Amazon or a Walmart, raising wages. Why? Are they not outpacing inflation? Like, why does that not count for more substantial wage inflation?
Well, if you look at the official statistics, negotiated wages in the Eurozone are just growing at a pace of 1.7% a year, and they are driving core inflation. So it's still lower than the target of the ECB. That's for the Eurozone. What you see right now is more a kind of normalization of prices and wages. Yeah. We will probably have 4% inflation at the end of the year. That's because of the development in oil price. But it's if you measure the increase in consumer prices over 1 year. But if you measure the increase in consumer prices over 2 years, you also come to 4%. So that's more a normalization than something else, in my mind.
How big do you think the gap is going to be between the major global central banks in a couple of years' time? The UK looks like it's going to be hiking rates. I hear plenty of talk in the United States that we could get up to the neutral rate, let's call that circa 2%, and then have to go further in order to push back on the inflation narrative. As you say, the ECB feels like it's in a very different place. You know? This cycle could be accelerated, it could be relatively short. Do you think we could find ourselves in a situation where the Bank of England raises rates quite aggressively, the Fed is following, but the ECB does nothing? And if so, what are the implications of that?
Can you hear me? Yeah, sorry. I didn't get the full question.
What is the policy divergence going to be if the Fed and the ECB, the Fed and the Bank of England go in one direction and the ECB doesn't find itself in a position where it gets to the point where it can raise rates this cycle?
Yes, we might have a huge gap in the years to come, especially coming from the side of the ECB. On the continent, the policy choice is quite clear. So fiscal policy is about to tackle the inflation pressures due to energy. Many governments in Europe are cutting taxes on energy, and it will have a sizable effect in lowering inflation next year. And the ECB will look through. So probably the ECB will remain on hold in terms of rates, in terms of unconventional monetary policy for until at least next year.
Dr. Breuer, just one final quick question. What are the implications of Jens Weidmann leaving the ECB? Are we going to see a more dovish ECB as a result of that?
We will. I mean, the ECB has already changed a lot in the past since Weidmann joined the ECB board, and the ECB has become much more pragmatic than before. We have seen that it reacted almost immediately to the pandemic situation. I think the changes at the ECB are ongoing and have already been done. And it's not about only one person. It's about the situation in Europe.
Dr. Breuer, we're going to leave it there. Thank you very much indeed. Sylvain Breuer of S&P Global Ratings. Greatly appreciated. This is Bloomberg.
Time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm John Hyland. Bundesbank President Jens Weidmann is stepping down from his post at the end of the year. A statement from the central bank says he submitted his resignation for personal reasons. The 53-year-old has been Germany's central bank chief for more than a decade and is considered one of the more hawkish members of the European Central Bank Governing Council. Activision Blizzard has reportedly fired 20 employees in a bid to clean up its culture. The company has faced accusations of gender-based discrimination and harassment. In August, hundreds of Activision Blizzard staff protested after management dismissed a lawsuit describing a so-called frat boy culture. The Financial Times says the game maker will expand its ethics and compliance team. And UniCredit is planning to move most of its London-based trading staff to Milan, as the company's CEO looks to accelerate the bank's plans to shift people to the continent after Brexit. About 50 staff working in its trading operations in London have been asked to relocate. The bank is also working on a plan that will offer administrative and headquarters staff the option to work from home approximately 2 days a week. And that's the Bloomberg Business Flash. Guy?
John, thanks very much indeed. Bit of breaking news. Great story coming out of the Bloomberg right now. PayPal said to be looking at the possible purchase of Pinterest. The approach has been made about that possible acquisition. They've discussed the price. We're talking kind of circa $70 a share. I think that just on the maths is about a 25%, 26% premium. They're making it very clear that the deliberations are ongoing and may not lead to a deal. Breaking news on the Bloomberg terminal. The close is next. This is Bloomberg. So we're wrapping up what actually looks like a fairly uneventful session at a headline level, but we're deep into the stock story now, the single stock story, as we work our way through the earnings narrative that we're really trying to figure out what it means. The inflation story seems to be really kind of part of the narrative, but what we're also seeing is pricing power, and that is really critical, and that's what seems to be keeping the story, kind of the narrative, on an upward trajectory. Europe's not up by much today, but it is up. The FTSE's up by 0.1%. The DAX is up by 0.1%. The CAC is outperforming today. Danone's bouncing back on the back of Nestle, which is interesting. Plus, also some of the luxury stocks are coming storming back as well, which is kind of helping things out a little bit there. Defensive mix, though, you could argue, but that may be a sort of a knee-jerk reaction, because actually once you dig into it, actually this is an earnings story, I think, here. So let's take a look at the session and how it's developed and what we're seeing. Volume's not that great, to be honest, but as you can see, really tight range. We come up a little bit and we've picked up a little bit towards the end of the session. We're up around 0.3% as we come into the close. 470, we're back with a 470 handle. In terms of the sector story, as I say, at first blush, it looks defensive on the GRR. And what you need to do, I think, is then dig into the details, because Nestle is a huge component part of what we're seeing here. So what you're seeing is food and beverage outperforming today. Nestle, the world's biggest food company, really driving that food and beverage up there. But then you look below it, utilities are actually having a fairly good day today. Energy's tracking higher, which is interesting because actually energy has come off the floor, but it's still largely negative. And then you've got the luxury sector in the consumer space. Technology, travel and leisure, basic resources, the autos, that's where the weakness lies here in Europe. But as I say, it's about earnings. And it's about the colour blue, actually. Let's talk a bit about what's happening with ASML. ASML is a paint company, a coatings company, and it's really struggling to source key things that it needs to produce that paint. Paint prices are likely to rise quite sharply as a result of that. In particular, anything the colour blue, apparently. That pigment seems to be in really short supply right now. So if you're looking to paint your house blue, I'd get on with it. ASML, the chip company, the lithography company, feels quite conservative, actually, what they've laid out in terms of the guidance. But their machines are likely to remain in high demand. Again, there's a shortage issue here. And then we come to Nestle. Well, Nestle is also battling high input costs, but what it's able to do, Alex, is pass those on. They're seeing the best growth they've seen in 10 years, and they're able to price for it. So what they can say to the consumer or the supermarkets is, you've got to take these price hikes. We're going to continue with our margin development. And that's really interesting, I think. Yeah, and I just wonder, though, how long does that last for? So Nestle's CEO, Mark Schneider, did speak exclusively with Bloomberg on that bullish outlook.
While you will not be able to repeat the enormous growth rates that we saw in 2020 and the first few quarters of this year, what we're also not seeing is the elements of a hangover. So basically what you're seeing is continued nice growth from a higher base that was reached over the last year and a half.
Joining us now is Jean-Philippe Bertschy, Vontobel consumer goods analyst. He's a buy rating and 130 price target on Nestle. Question on the margin part, how many price increases do you think that Nestle is going to be able to do, passing those costs on to consumers?
Well, I think we see just the beginning of the price increase at Nestle. We see a sequential improvement or acceleration from Q2 into Q3. Expect a further acceleration in the fourth quarter and of next year. Some key input costs, but as well the logistics costs, which is a pain for the industry.
In terms of where we're seeing the real strength, it seems we've all been out and bought pets, so pet food remains incredibly strong. Coffee remains incredibly strong as well. When we think about Nestle, it's almost kind of heads I win, tails you lose. If we go into lockdowns, if we see further COVID problems, they are going to benefit when people return to home. But they're also going out and eating a little bit more, and as a result of which Nestle benefits from that as well. How do you think Nestle is going to navigate the winter? Where do you think the strength is going to be?
I fully agree. I think it's the well-balanced, diversified portfolio. What is very interesting today to see is that the very strong growth in retail. So with out-of-home consumption increasing, but you have the retail business continue to be very strong. And I think this is definitely linked to strong differentiated products, innovative products, which are leading growth. You are mentioning pet care, but you can mention as well coffee and plant-based with an expanded product range, which are like very positive and likely to continue in coming quarters.
When are we going to reach the peak of what Nestle can actually do? I mean, like you mentioned, those are some short-term catalysts. They can use current operating margin to then fund any extra cost inflation they might see, say, in the back half or early next year. When do we run out of juice here for Nestle? What's the top?
Very interesting. I think that's as of next year. I think management was very clear and very upbeat with regards to volume growth and accelerated pricing for next year. And I think you see that some very attractive product categories, pet care, with increased adoption of pets worldwide because of the COVID. So you have like an elevated growth on a higher base right now, but as well the new opportunities in plant-based. So I think this successful story is set to continue as of next year.
Jean-Philippe, thank you very much indeed. We will leave it there. Jean-Philippe Bertschy of Vontobel, greatly appreciated. Let's talk about one of the other stocks I mentioned just a few moments ago. The chip lithography company. It makes the kits that you use then to make chips, ASML. Joining us now is Stefan Hori, head of sector equity research at Odo. Let's talk a little bit about where we are. I was I read through the numbers this morning. I look at what they've said. It sounds like they are being very, very cautious at the moment. And I'm wondering whether or not you think that caution is justified. You've got a 900 price target on this business. What is it going to take to get us to 900? And how much of this caution do you think is justified?
Well, I am not sure they have been so cautious. I just think they are saying what they see, and currently they have some supply chain constraints that prevents them from meeting their expectations for the year. But we are talking about only 300 million euro of revenue less compared to their initial expectations, and those revenues will be achieved in 2022. So nothing of the long-term structural story that we are seeing in ASML has changed today. It's just that they are highlighting that even for ASML, there's a problem in the supply chain.
So it's one of the top performing stocks in the Europe stock tech index this year. They also wind up saying that the current chip crunch is going to last into 2022. What are the chances that that gets pushed back, and what's the impact on the stock?
Well, I think that the problem is that there will be still some problems in the supply chain in 2022, but it does not change the need of their tools, especially the leading high-edge tools like EUV. The tools that are used to make very small transistors. So the need is here. TSMC is crying for that. Samsung wants it also. Intel, everyone wants it. So, I mean, they will probably serve the supply chain and probably succeed to deliver what they have promised to the market. They have said 55 tools. Those tools are worth 160 million, so you can make a calculation, and that will drive growth next year.
How much pricing power do they have? As you say, these pieces of kit are incredibly expensive. As you say, millions and millions and millions for each machine. How much pricing power do you think they have? Chips are obviously in high demand. There is a shortage. What does pricing look like going forward?
Funny enough, the prices of ASML are not really depending on from the situation. Is it a moment where chip prices are going up or not? They don't really mind. I mean, what matters is really the productivity of their machines and what you can make with their machines. Without them, it's going to be very, very hard to have an iPhone 14 or an iPhone 15, and that's probably what makes the value of their tools. They can increase the price of their tools in each generation because they deliver something that nobody can really deliver at their place, and they have that kind of structural pricing power, and it does not really depend on the current chip shortage.
We're going to leave it there. Stéphane, really interesting stuff. Thank you very much indeed. Stéphane Houry of ODDO BHF. Greatly appreciated. We're wrapping up the European session here. Positive, but only just. Earnings kind of the key driver, I think, today, particularly with stocks like Nestle, ASML fascinating as well. The FTSE 100 and the DAX pretty flat, to be honest, but positive, like we're creeping ever higher. The CAC on today, bit of a Danone bounce back, plus also some of those luxury stocks coming back. We saw the Gucci numbers last night. They weren't good. Alex now is interested in the fact that Gucci means good.
I knew that way before you. He just got that yesterday, and I thank the members of my team who are younger than 30 who told me that. Okay, let's get some breaking news. Back to that breaking news for you. Reportedly, PayPal is looking at a bid to buy Pinterest. It would be potentially a deal that would be a 26% premium, a potential price of around $70 a share. That would value Pinterest at around $39 billion. We're going to talk to Ed Hammond, who broke that story for Bloomberg next. This is Bloomberg.
This is Bloomberg Markets European Close. I'm John Hyland, live in the principal room. Coming up, Mandy Zhu, Credit Suisse Chief Equity Derivative Strategist. This is Bloomberg.
All right, back to to that breaking news for you. PayPal exploring the acquisition of social media firm Pinterest. You're looking at potentially a deal around $70 a share. That would value Pinterest at roughly $39 billion. PayPal down, Pinterest up, Twitter down, all reacting on that news. You really have seen the shopping online has been a huge help to PayPal. I mean, that's, at least for me, that's how I pay for like 70% of my things. And this would just sort of like increase its sphere in so many ways.
It's interesting. The merger arbitrage story on this is we're at 62.35. We're not going up to that 70. So the market, while it's pricing the possibility of this deal, you got what, a 12% pickup in the stock. It's still not convinced it's going to happen. There was a lot of caveats in what was reported in this story. There's no guarantee that this ultimately moves towards a deal. This feels maybe a little bit like Ed Hammond broke the story. We're obviously quite early in this process. So it's going to be interesting to see ultimately kind of how the market prices this one going forward. At the moment, there does seem to be, just looking at the pricing on the screen, a little bit of caution surrounding this.
Yeah, that's such a great point. We have also seen, though, PayPal kind of increasing its bid for different companies. I actually forgot about this, that it bought iZettle, a European small business commerce platform, back in 2018, and really wants to challenge Square, so kind of beefing up that range. And Pinterest has been doing a lot of different things and trying to increase its user engagement, et cetera. After you have some daily active users fall off a little bit in the second quarter, the monthly active users, I should say, missed estimates.
Yeah, it's interesting. So the challenge with Pinterest has always been, how do you monetize it? How do you actually make this site make money? And how do you sort of commercialize all of those hits? And I think that continues to be one of the challenges. So you do wonder whether or not ultimately this is going to be something that solves that problem. So yeah, stocks up by around 12%. We'll see ultimately whether or not this deal goes anywhere. But the market, it is higher, but it is still greeting this deal with caution.
Yeah, we'll definitely get some more perspective in just a moment. So to update you, as Guy just saying, PayPal up by almost 4% on that news, which would be so interesting because you feel like getting more of a book in there for PayPal would be something that the market might want to see in terms of being able to expand its growth, particularly with that whole buy now, pay later thing, which quite frankly, I still don't understand how that's not an actual credit card, but whatever. Maybe I'm too old.
Yep. Well, I think many in the banking industry would agree with you. But it's also interesting as well that the bigger companies, and maybe we don't include this, PayPal, within this, there is going to be huge resistance to the large kind of FANG companies doing any more acquisitions. And the regulatory pushback against them is going to get greater and greater. So you wonder if you take a kind of a step down into the next league in terms of the size and scale of companies that we're talking about, whether or not actually there is greater opportunity there to ultimately do deals rather than allowing the larger companies, which historically have just hoovered everything up, to be able to make these transactions work.
Yep, I think that's an excellent point also. And, you know, you also might make the argument, too, that maybe Pinterest has gotten relatively cheap enough to do it now. The stock's down about 16% so far this year. So we still be paying up for a premium, but you're definitely not necessarily buying at the top. Again, the news that Bloomberg broke is that PayPal is looking at buying Pinterest. You're looking around $70 a share. That would value Pinterest at about $39 billion, according to some sources, about a 26% premium to Tuesday's closing price for Pinterest. The market kind of taking it on the chin here. You have PayPal off by almost 4%. As Guy was pointing out, the merger arbitrage trade not hitting up to about 70 for that price for Pinterest. So that's kind of the news that we're looking at here. Pinterest went public just back in 2019, so it wouldn't have been public for that long. Ed Hammond, he's here. I don't know if he's good. We're working on that. Maybe we'll bring him in. He's Bloomberg Deals reporter, Ed Hammond, who broke the story for us. Can I bring Ed in? Let's see. Can you hear me?
New batteries.
Can you hear me, Ed?
I can hear you, but I need new batteries.
Guy, he probably can't hear you.
It's a very modern tech problem.
Okay, so tell us about the story, how you broke it, what did you learn from it?
I can tell you about the story because we just put it out there. Obviously, you know, PayPal has expressed some interest in acquiring Pinterest. We think they're discussing a price of around $70 a share, which, as you say, would be a premium based on where they're trading today, but as still a substantial discount on where they've been in recent years. The logic for this is an interesting one. Look, when I put the tweet out saying this was happening, nearly all of the responses were sort of question marks like, this doesn't make any sense. I'm not an expert in the space, so I don't know what the exact industrial logic would be for this, but I do know that there is a decent amount of e-commerce momentum going on in Pinterest, and obviously PayPal is, this sort of just gigantic payments business now, and it's looking to expand anywhere it can.
Were there many issues with this deal, Ed? I was talking a moment ago about the fact that large tech deals are likely to come under greater scrutiny. Would this?
Well, it's definitely a large tech deal, guys, so I think your point is an astute one. It probably would come under scrutiny. That said, I don't think of PayPal as sort of big tech in the way we think of Amazon or Facebook or Google. Yes, regulators would, I'm sure, take a look at something of this size, but they're not necessarily going to come down on it in the way that they might a company that has, that huge sort of social influence. And Pinterest, look, it is a social media site. It does have eyeballs on it in the same way that any other social media site does, but it's much, much smaller. And I don't think you can make the argument that it carries anything like the influence of the biggest social media companies.
I finally realized how to make a board, like maybe a year ago. I felt really proud of myself. Would there be any other bidders? Did you hear anything out there about that?
We haven't heard anything out there about other bidders. That said, look, this is a company that is historically quite cheap right now, so there may be other bidders who do emerge through this process. Maybe our story actually draws some people out of the woodwork. It wouldn't be the first time. And I think if you look back, there were rumors about Microsoft potentially looking at this earlier this year. We didn't confirm those, so I have nothing to substantiate that. But as I say, stories like this can often draw people out.
Nice story. Ed, thanks very much indeed. Bloomberg's Ed Hammond breaking the PayPal Pinterest story within the last few minutes. What are we going to talk about next? Tesla reporting after the bell. ARK Investment CEO Kathy Wood says her base case for Tesla, 3,000. As you can see, we're not quite there yet, but we'll talk about this next. This is Bloomberg.
We just want our clients to be exposed to the next FANGs, which are not going to be in the FANG category, but the next FANGs. And Tesla's becoming a FANG. I think it will end up in that group. Electric vehicles are taking massive share from traditional gas-powered vehicles. And so the stock finally is responding to that reality.
Kathy Wood speaking to Bloomberg's very own Karamasa yesterday. Tesla gearing up to release quarterly results after the US close today. Here with the preview is Bloomberg also reporter Keith Norton. Keith, that's got a punchy target. We're at 800 now to get to 3,000. What has Tesla got that is going to continue the momentum that it has now? What are we going to hear later on?
Yeah, well, Tesla is really on a tear right now. They announced their third quarter sales a few weeks ago, and it really was a huge upside surprise. They sold almost 250,000 vehicles in the third quarter worldwide, and that was up 75% from a year ago, and more than anyone expected. They've got two factories coming online, one in Texas, another in Berlin. They should be able to build 1.5 million vehicles by the end of this year. So they are just really in a huge growth surge. The company themselves say they think they'll be selling 20 million vehicles by a year by the end of the decade, which would be twice what Toyota sells right now.
In terms of the numbers in the call today, it's my understanding that Elon Musk won't be on the call. Are there any fireworks that we can expect then, or is this going to be a pretty boring hour or so?
Tesla is never boring, and I don't think we can count Elon out. He did say in the second quarter earnings call that he may not be on, but he has a lot to crow about. So, and by the way, in terms of outrageous numbers, Adam Jonas from Morgan Stanley just predicted that Elon Musk will become the world's first trillionaire because of Tesla and his rocket company, SpaceX. So I think it's always possible that Elon will show up. The numbers, by the way, the number to beat is $1.67 a share, adjusted EPS. There's a lot of expectation, very high expectation, that Tesla's going to have a big beat.
Keith, Tesla feels like it's valued. It probably is valued as a tech stock. Also, companies are not, but they are catching up. How does that relationship work? As they catch up, is it a zero-sum game for Tesla?
Yeah, Tesla's definitely valued as a tech stock. Their valuation now is, all the world's leading automakers combined. Tesla is a tech stock in many ways. They are weathering the chip crisis, for example, better than the legacy automakers because they write their own software, and they've been rewriting software so that they can maximize chip usage. And that really helped them with those great third quarter sales results. So they are a tech company.
All right, Keith, thanks a lot. We really appreciate that preview for us. Keith Naughton joining us from Bloomberg. And we got a lot of things coming up in the next 24 hours unrelated to Tesla. The Fed Beige Book is coming out at 2. Don't miss that. President Biden delivering remarks on infrastructure. UK Health Secretary Presser will be coming at the top of the hour. Guy and I will be taking that on radio for you. Guy?
Absolutely. Fascinating to hear what the Health Secretary has to say. Sajid Javid. Can't believe I didn't be able to say that. It's been a long day. Tomorrow, EU leaders meeting in Brussels. WeWork expected to start trading, going via a SPAC, remember. We get earnings from Intel. We've got American Airlines, Southwest, AutoNation. We're going to speak to Gary Kelly tomorrow. We're going to speak to Mike Jackson from Southwest and from AutoNation. Looking forward to all of that. Scott Kirby is coming up on Balance of Power. This is Bloomberg.